So many people think, rates up, the currency goes up. But the difference is it's not a healthy rates up. The economy is strong. We're going to take some of the punch bowl away. Everyone's partying too hard, too much liquidity and all of that. It is debt collapsing and fiat collapsing, because people need to understand fiat and debt are the same thing. The debt is just fiat promised at a later point, for which a rental agreement is associated, the usury extraction of interest rates. So you're watching fiat debt, same thing, just one is got a time frame to it, debasing chronically. This is why interest rates are going up. And it's also why the stock market is going up.
Hey everyone, my name is Anthony Fatsis and welcome to another episode of the WTFinance podcast. On this episode, I have the pleasure of welcoming back very popular guest, Francis Hunt. So Francis is a trader, technical analyst, teacher, and originator of the Hunt Volatility Funnel Method. So Francis, thanks so much for coming back on the podcast.
Delighted to be back with you, Anthony.
Yeah, looking forward to the conversation. A lot has definitely happened. We spoke 6 months ago and yeah, precious metals absolutely booming, more state control trying to come in line. But yeah, very much like to start broad. What are you currently seeing in the economy and markets?
Wow. The debasement of the dollar is real. It's having a little mini flurry right now, but the debasement of the dollar is very real. The debasement of fiat and other assets is very real. We shared on X yesterday our call that we made on the Nikkei when it was at about 22,000. It was a neckline of an inverted head and shoulders. And we said, not only is it going to run the previous high, that was the 39,000 of the 80s boom. And you've got to remember the Nikkei has been a busted flush for multi-decades, since 89. It just went down, down, sideways, down, 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 sideways. It eventually regained a little bit to get to the 22,000 mark, which is still, and that was in the 2020s, which is still, since 89, 31 years behind. And we said, okay, now it's going to run like you've never seen it run before to 74,000. And it's in the mid 50,000s now. So it's more than double the neckline that we had for it. And for me, it's a bit of a, in fact, I've got it right here. So if I just share it, it's, sometimes saying and showing is two different things. So if I just share screen, you'll get to appreciate it. We'll do the entire screen. What you'll spot about this is, there it is. You can see in 2020, this is where we were saying there's going to be a major breakout. This is log scaled, by the way. So please understand this distance is huge. That is, around the 22,000s, and that is 74. That's literally three times, more than 3 times of it. And in and around the 2020, 2021 period, we were saying this is going to break and it's going to do this. And it's doing exactly that. And there's a reason, and this is a microcosm of what's happening on NASDAQ and other markets in other nations, countries across the world. It appears like you're having an amazing economy because the markets are going up. But what's also been happening at the same time we made those predictions, and this was just following our call of the turn in the debt markets in 2020, we also rolled into 21 and said the Japanese interest rates on the midterm, long-term yields were all going to go extremely high. At the time, they were around 0.1s, 0.2s, and 0.4s. All well below 0.5% on the Japanese bonds and interest rates. And we said these are going to go to 4s. And that sounded outrageous because, again, like the Nikkei, there was the 1989 high on the Nikkei. You'd had these multi-decades of just below 1, below 0.5 even a percent in interest rates as well, this entire period. We are saying the turn in the US debt market is shining the light on all forms of debt. Japan also has an immense amount of issued debt, and the rates are going to start going up, which has been one of our primary theses. Rates higher. higher than people expect, higher, faster for longer, pullback shorter, lower and very minor, and then reasserting higher. And Japanese inflation officially, I've got to come back to the big lie of America and its inflation, but Japanese inflation officially is now higher than American. And you've got its long bonds rates going up and up and up, and all of this. And at the same time, you've got the Nikkei climbing. And this is all on a debasing yen. So the yen is losing value. The rates are climbing. So many people think, rates up, the currency goes up. But the difference is it's not a healthy rates up. The economy is strong. We are going to take some of the punch bowl away. Everyone's partying too hard, too much liquidity and all of that. It is debt collapsing and fiat collapsing, because people need to understand fiat and debt are the same thing. The debt is just fiat promised at a later point, for which a rental agreement is associated, the usury extraction of interest rates. So you're watching fiat debt, same thing, just one is got a time frame to it, debasing chronically. This is why interest rates are going up. And it's also why the stock market is going up. The stock market is going up and is going to make 74,000, as we're illustrating here. And I really do want to show you this out of log scale, because you'll see how huge this is. A move that we've already predicted, and that 56,000 where the Nikkei is to 74,000 is still a long, long way, but it looks very small because this is a log scale. That is a percentage based. But the key real story behind this is when you take that same Nikkei since the 80s and you divide it by gold. I've got just 2,000 here from 2006. But what you can quite clearly see is that the Nikkei actually isn't performing amazingly in gold ounces. And when I say gold by yen, because we're talking about Japan now. So the Japanese primary index, gold in Japanese yen, because the Nikkei is obviously in Japanese yen, divided out. And what's actually happening is you're getting a rebasing downwards of value, a chronic rebasement and down in value. Yes, you had a little bit of overperformance here during this era from about 2012. That was when the West was doing QE and Japan relatively less so. They were the original QE. Then the West started doing it. So they were debasing chronically when they were doing QE. And then we started, of course, 2011, 12, you remember all of that from the lows of 09. They got a bit of a run, and now they've been debasing again. So you're actually looking at a microcosm of the whole economic system here when you look at this. What is actually happening is that you are facing a situation, and let's just go and put that Nikkei back on for you in the live charts, not just the screenshots. You're watching a situation where on the one hand, it looks like a runaway market. There's the live chart. Since here we are just runaway, and here is it. This was how big this call was, by the way, the scale I was showing you. So when I delog that, you can see the 70 isn't even on the page now. I need to actually drag it down. That's how much further we still have to go. But that was a huge, huge call. We said it's going to happen unerringly quickly. But it's happening unerringly quickly in unerringly fast diminishing yen. The fiat debt debasement is the only thing that matters in terms of your understanding of what's going on. And I've gone long form on you, but your question was, what's on my mind? What do you think people need to know? And here's the point. It doesn't actually matter. You think this is a Japanese phenomenon. It 100% isn't. This is a fiat debt debasement environment. And here, just so that you can see where these chart comes from, let me just go and get that divided so you can see it live, because I showed you screenshots. XAU, JPY. So we are taking the same Nikkei in yen, and we're dividing it by gold in yen. So we're canceling out the yen, and we're seeing the Nikkei divided by gold. And if you have a look at that, and you have a look at the history. Now I want to just get not the Pepperstone, that's too short. It always substitutes that one in. I want to get the FXEM. There's your history. There's your history. I'm wondering if we can find one that just gives us even more than that. I don't know why we have a shortage of yen history. Let's just go Saxo Trader, because I want you to see that all of these are actually rebasing down. They're rebasing badly down. Let's see if I'm trying to find one that actually has a bit of a better history. Not quite sure why we're getting so little history, but the point is quite clear. It's rebasing down, and it doesn't change, by the way, a key event. Let's just do the exact same now for the NASDAQ. Everybody, tech, you know, NASDAQ. Okay, let's do the NASDAQ. Now that's in America, so we do USD, and it's dollar-based. And I want to show you that the song remains the same. It's a famous Led Zeppelin tune. The song remains the same. And I want to show you this so that you can see this is, you know, the world as it stands right now. There was a time, I'm going back to log scale, where tech certainly outperformed the gold market. And in fact, let's go 3 months, get a bit more of that history a little bit more tightly. You can see when it happened. During this period here in the run-up to the .com was a single-minded period. We had peak gold at 1980. You should not have been in gold. You should have been ideally in tech stocks, and you would have chronically outperformed. There it is. That's your moment. Since then, you had a large deflation. You had an echo bounce. So you could have argued there might have been a decent period between the subprime lows till around 2021. So 2021 from about 2012, you could have had an echo bounce in, but you never made the previous highs. And now if we go to the monthly time frame, this is considered the best tech-based stock market performer, you know, of probably all the nations in the world, the United States, and here's where you are. You are in a real problem. I'm going to just make that line a little fainter. You can see we've got a neckline here. You've got a head and shoulder against gold. This is in a major head and shoulder, and it's triggering. So we're talking in a monthly period where the current month has broken now and staying below the neckline of relative valuation. So 4.58 ounces is where you're at, and the neckline is 4.65. You can see that blue number. So you need 4.65 ounces of gold to buy a basket of weighting of tech stocks. And this is in a head and shoulder collapse to the downside. And if I bring that target into play, you know, you could end up, clean my face a little bit there, at 0.32. So you tell me, what's the better asset to be holding? The alleged best asset that everybody has been holding because of the .com boom and the echo bounce of 2012 to 2021, late 2021, around about there. Since then, we are early doors in the rebasement downwards of all assets, particularly tech stocks, but of all assets, housing, retail housing in gold ounces. Everything in gold ounces is losing. Even silver right now, but it was overperforming until it slapped in the face. Miners will occasionally outperform and have had a spell of outperformance. It's very hard to beat the gold ounce. And my entire thesis is, and this, if everybody, and I'm going to finish now because I know I've gone really long form and you've just had that one question, but this truly is the entire thesis of understanding everything, how the world is working. Your global nation states, wherever you are living, are actively in a debt and fiat debasement cycle, whereby everything that was inflated in the everything assets bubble is currently being deflated, and you are not noticing because of being a nominal normie. The value of your house is still the same in dollars, euros, pounds. You think your stock market portfolio actually went up a little bit. Gold went up 70% is all you need know. Everything else went down by whatever they went up, less than 70%. That's your NASDAQ, that's your everything. It doesn't matter whether I'm talking Japan's Nikkei or right over here. We've made ridiculous upside calls, and we tell you they're still not performance you should be chasing. Your positioning, your unit of account is not your fiat of your nation that you are residing in. Your unit of account is 100% a gold ounce, and it is international, and it doesn't scream. There's no board, there's no committee that's going to push it. Only people like me, messianic people who are talking for free and really passionate about trying to help people in the financial world are going to say this. You're not going to hear Epstein say it. You're not going to hear, and believe you me, he's alive somewhere. You're not going to hear Klaus Schwab say it. You're not going to hear your president say it. They are running a shell game against you. You are the marks. It is an adversarial system. They need you to stay put and not understand what is going on so that they can continue to accelerate that which they are doing. You are in a financial war. If you didn't read any of the Epstein recent revelations, many of the things we have said have now been further confirmed. We can drill down on that. But you are in a spiritual war. You are being attack vectored on every level. Now, the financial part of your preservation, which is not the everything part, but it's an important part, means you need to understand this one key point that I am making. Your unit of account is a gold ounce. That is it. Everything else is deflating currency, everything, and devaluing assets that were hyper overvalued during a debt binge spree that turned in 2020, for which we were the first to call before Tudor Jones, before Druckenmiller started talking their book in 2024. And it's not out of ego I say that. I'm just saying that was in 2020 is the point that it turned. The proliferation and theft that they perpetuated during the COVID was the final theft. There is no more market for bond instruments anymore. And it has to devalue, and they are working all sorts of schemes. Cayman Islands owns 37% of the long end of US debt issuance. Leveraged Cayman Islands with a 7 billion turnover. The right there under the belly of the beast, stuffed with Goldman Sachs hedge fund managers and other dark statists that are maintaining the Ponzi scheme, that are being given unheralded 24-hour finance by the bulge brackets. Try get that funding deal that the basis trade guys in the Cayman Islands do. Okay. I'll tell you something else. Operation Twist. That was really interesting. That was the end, the long end being reverted. There was QE 1, 2, 3. You'll remember that. Then there was one that was called Twist under Bernanke. And the very interesting part about that is the state bought the long end and sold the shorter end. What happened is China got out of their 20 years, their 30 years, and their 10 years debts into 5-year debts and 3 years and 2 years, so that they could let that expire and not roll it on. They stopped buying. That was already during QE, the previous one. So they have been static, and their bond portfolio is devaluing. And at the same time, they've become prodigious buyers of gold. The wealth is moving from where we currently have very high living standards, Westerners, European nations typically. So we're talking Europe, Commonwealth, America, and United Kingdom. And you are the marks. Most of you watching that will be in one of those nations, and you are the marks. You are going to be brought down in living standards, most by the fiat, and the hegemon falls from the highest ladder. Anyway, I think I've said more than enough. There's so much for you to unpack. This is the key concept people need to understand.
Yeah, definitely a lot to unpack, and thanks for showing us how it looks as well. What do you if I looked at that chart there, it does look like it's coming to sort of a bit of a support, especially in NASDAQ gold. And it looks like if you look at the precious metals charts, they do look extremely toppy. Do you see that as a potential shorter term next couple of years reverse before we get that sort of final push up, or how are you actually looking at the market?
No, I don't see it anything like how you described, actually. I see you're at a triggering event. Again, I'll just bring that chart back up to make sure we're talking about the same thing. We're at a triggering event break of a level here on this. This is a reversal pattern that had incredible volatility. There was an effort to fight back. That's that wick. It then charged back up, and it's been wicked back down. So despite recent setbacks for gold and more particularly silver, for example, you are at a breaking point, and that's where it gets disorderly quick normally. You can, of course, get a return move. I would argue you might have already had that on a smaller time frame. Don't forget, I'm showing you this on a monthly time frame. We can go and have a look at it. So to me, it's about to get more interesting for the debasement of tech stocks. If I go to a weekly time frame, you can see this. You have a kind of a hammer here, and you then go rallying all sharply back up and attempt to revalue, and then bang, straight back down. This is typical skittishness at a key level of significance, which previously had support, but couldn't make a new high, made a lower high, and is now rolling over and running this low, and there's a battle royal happening, and one side wins, and then you spill. And, you know, for me, that is going down. That is going down. So we're about to see a resumption of gold strength. You had a little bit of sketchy numbers. So now, to answer your question, that I have to bring other things into account. So you had a non-farm payrolls number that came in, not on Friday, because government shut down and all of this. Don't forget, they're still hardly doing stats. They're doing this whole fake light. Oh, we don't really have the people. Oh, we've cut how much we're spending. This is all going to be cover for the lies they're generating right now. We were on the beginning 3 years ago when you had, 21 or was it 22 with Yellen and Biden. When you hit a recession, I said that's a recession. Because it's criteria. The criteria were met. They said, no, you can't have a recession and have such a red hot labor market, you know, and all of this stuff. They were hiring DEI employees. They were doing the whole, government was doing a massive hire, and companies that were doing contracting services to government were the only areas of growth. It was 56% of all employment increases. The rest of the society is moribund in the US. And he's struggling. And here you had government that was doing it. We said it's all a lie. They've re-rated 3, 4, 5 times monthlies, quarterlies, and annual labor stats. It's a complete lie. The whole propaganda of the state stats is to perpetuate the deception of the corrective realm that you are in, ergo your gold ounces valuation. That is the truth. So it is not Bureau of Labor stats for information. It is for active acts of deception to keep you in the mindset that everything is fine, carry on, keep calm and carry on. And I'm saying absolutely not. And the CPI, they had this benign CPI number, 2.5 and core at about 2.4 even. You're talking about a country in the United States that's currency lost 12% plus to the euro, one of its largest deficit trade bloc nations that it ran a record deficit with. That means you're buying more of their stuff than they are buying of yours. And China, you had a 6% deval to the Chinese yuan. So last year, the dollar was losing, never mind the fact that it was down 42% against the ruble, 16% against the Hungarian forint, you know, a swathe of currencies, an absolute swathe of currencies, which proves our point also that the hegemon falls from the highest ladder. It's going to have the greatest loss in value, buying value of all. Why Triffin's dilemma? What is Triffin's dilemma? The aspect that when you're the hegemon, you throw out way more paper in lieu of excess goods that you are buying. You give people dollars in treasury bills. They become forced investors in treasury bills. That means they hold dollars and USTs. Now they don't want that. They are trading those in for gold as soon as they get them. So they say, rather give us the gold bars. So in effect, America is throwing gold bars because actually China is not accumulating any further treasuries, but is accumulating gold. Everything that you buy that is funded and sourced, in fact, you have the Adelson family that are part of the sourcing and the establishment of many of the production aspects in China. The wealth is now just being moved to a different part of the planet. And you're being told that everything is normal and it's only 2.4% inflation. How can you bring bulk of your goods in from currencies whose currencies are going up in almost double digits relative to yours, and they are crap as well and are losing to gold, and be running and tell everybody that inflation is actually only 2.4%? Yeah, Jim Willie, I heard him talking on this topic. I heard O'Dowd, of the BlackRock guy, I think it's Ed O'Dowd, talking about everything. Everything is a lie. He was saying CDC don't do true stats for cancer anymore since 2022. He said he's now on board with us. Labor stats are an absolute lie. So the big question is, why wouldn't CPI stats be a lie? You even have shadow stats that have done this on Ronald Reagan's basis. And you're nigh on double digits there, and they're telling you 2.5% inflation. Prices of cars went up, and they showed a deflationary force in the car component. The new car component had a deflationary effect. And Willie was saying how all the car prices are significantly higher. It's a complete lie. What? Are you making some technological, because this has got this feature and that feature and the previous model didn't have that, therefore it's not directly comparable, it's a superior car and it's 20% more superior in its tech and all of this, but it's only 15% more expensive, therefore it's actually deflationary? I mean, you get lies, damn lies, and then you get statist organization statistics when they're trying to mask a Ponzi unraveling. And that's where you are. So everything down. I'm expecting the NASDAQ to go down in gold ounces. I'm expecting it to become disorderly so that even nominally it will potentially even go down in this deflating away dollar for periods. So the whole go up part might also come into challenge at the nominal normie level. And as I say, that's not the level to be watching it. So gold is going to be getting very ready to resume its upside against all fiats, including the dollar, regardless of fraudulent statistic releases that were designed. You've got to also remember the Dixie. Let me show you another chart. The Dixie fell out of an 18-year trend against the others. And that's why they fear the disorderly aspect and being found out. That's why suddenly we got this amazing non-farm number. Better earnings, better wage increases, still ridiculously low, like 0.3. You times that by 12, and you're talking about 3.6%. And then they'll tell you, no, but that's good because the inflation's only 2.4%. So you're going up. No, you're not. If your growth annually is 3.6%, you're going backwards so badly. It's unheralded. But anyway, here's your on a monthly basis. Here's your Dixie break. You've just broken a key structural level, and that was being noticed. So suddenly we get these little moot points to try rally the dollar on the big time frame. There's no real rally here, but it stopped going. At least it stopped it going down. You can see a couple. If I drop to the weekly, you can see a couple of green candles and a little bit of a hammer. That right there is a flag that runs across the base of that long-term trend. Bang. That's what I'm drawing and showing you. You will trade 87. And that's not because I'm a bull, the euro, and I'm a bull, the British pound or anything. They just have to fall too, but not as far, because they're not the hegemon. Triffin's dilemma means the most paper is issued by the issuing nation that is overbuying other people's stuff and sending paper in return to proliferate their currency as an international hegemon. That period is over. And some will say, but Japan's more indebted. Unfunded liabilities added back in. America is at 550, 600% debt to GDP. Japan goes from 250 to 350 with their unfunded liabilities. Okay, so the hegemon, it's in design, Chiffin's dilemma. The main hegemon is the biggest, dirtiest, filthiest, largest shirt in the laundry. It is not the least dirty. It is the absolute dirtiest. It falls further, and you're being lied to. You get mood music as an American that lies to you so that you keep on and carry on. You will have the highest cost of living changes, and it will be brutal by virtue of it, and imported will become unaffordable generally, and apart from the very base product. That's what's going to be happening, because people do not want your debt instruments anymore. That's why we said the 2020 call was our most significant call. It is a turn. And this is what you're seeing. The whole game is turned. Gold ounces are your unit of account. Back to you.
Yeah, super interesting. And I'm not sure if you've seen what Japan's done. They've actually been issuing debt and buying assets. So they've bought a lot of, Nikkei. They've bought a lot of sort of stocks. And it's actually, if you look at it from a net debt perspective, they're actually at the same level as the US because they've been buying all these assets. So do you see that as a trajectory of maybe the US trying to do that, or I guess they already have with trying to sort of build these sort of strategic reserves, or do you think it's just too far gone?
So just to say unequivocally, on an unfunded liabilities basis, when you take all aspects that are off balance sheet, America is the most indebted current country in the world. It's always like that for a hegemon. Okay, so Japan is often used by dollar maximalists as a wild card, but stupider boy in the maths class than me, he got a lower mark. No, he actually didn't. He got a higher score than you. So it's often utilized as cope. It's not an issue, and we're a bigger economy and all of this. It 100% is an issue. The asset class is no longer valued. In fact, there's certain countries that are holders of T-bills that have very little clout with America that are being made, who want out of them, that are not getting 100%. There is actually deals, nations that are small nations that own USTs right now on the long end and one out are getting 60%. Only the big nations like China and potentially European nations can they not let it be held. And this is all being kept under wraps. There is so much of the debt, and they want to hand haircuts to everybody. That's why, don't forget, you were hearing stories at one point, we won't pay interest on our debt to certain nations if they are doing business with Iran or doing other things. This is all about America can't pay the interest on the mortgages. Why do you think they're pulling out of NATO suddenly? They want Germany and Europe. Well, first of all, they should have always been doing that. But at one point, it was no problem for America. They were paying the war machine for NATO. Now, suddenly, we can't do that anymore. Oh, that's interesting. Why do you think they're going rampage for resources? So whilst they're telling you the world's going digital, you must go digital, you must have digital money so that your freedom can be impaired, tracked, traced, surveilled instead of cash and gold ounces at your home. They are going after Venezuela, Greenland, all other places where they can secure resources, land, mining rights, everything. We are in a commodity cycle, but don't get confused. The real commodity, the most important commodity, is the monetary metals, because there is a monetary crisis coming. And in the preservation of wealth during a monetary crisis, the monetary metals are your apex predator. They are your apex safe haven, actually, rather than against the predators, let me rather say. And you start with gold. You start always with gold, and the next move up in precious metals will start with gold. And once it gets well established, silver will come streaking past again. We have a $333 target for that. After that, we go 4 digits. We'll have a pause. So the slap in the face that happened in silver, it's worth mentioning, Anthony. We said once you ran 90.5, you will have done a second interim. There will be a point of reaction to come. And in actual fact, before I went on my riding tour, I did a complete community update, said, don't like the price behavior. I'm closing all longs. I don't short silver ever. in this cycle in a macro major HVF. I'll show you that chart in a bit if you want to see it. But we are going to get a correction at some point, pullback, churn, whatever. And we'd run the 90.5 and it kept going higher, it overshot. When you're going as fast as a Bugatti Veyron, which is what silver was actually doing, and somebody hits the, okay, go back to zero, you do overshoot when you're doing 450 kilometers. We actually went to 120 before we then got a slap. But we got a slap right back down into the 60s. Don't forget, we had a 90.5 interim level that we said from here, be aware. Now, so you should have been scaling back your leverage long trades in that. We trade leveraged in this. This has been the best time for us. We have built insane wealth. We've got community members that have all become millionaires recently and are writing in to tell us. I don't ask them. It's none of my business. I don't care. I don't want to say I don't care. I care a lot. I'm delighted about it, but it's not my place to ask for it. They are volunteering it. Thank you for the difference you've made in our life, trading long and getting them out. And we even put out on Twitter in the morning of when it started to crash, when it was still right up there at $111, we said, I've closed all longs. I showed the tweet. I did that because we had a lot of guys in YouTube who were trying to leverage trade off what we were doing Freeview. They don't get my takes as I do for premium. That's why it's premium. But anyway, that has happened and it will come again. There is so much more to come on silver. You're going to find out that there are places where there are complete lack of supply in silver. Complete lack of supply on in silver. You'll watch it. The supply level now is wafer thin. And everybody now reckons if they don't have it inside their own borders physically, they don't own it. And that's what's pulled the rug on the casino pricing on silver. So precious metals are, nothing has changed as an investor. An investor is blue pot, no leverage. Nothing has changed on any of our theses. On a HVF method basis, for those that leverage trade, we ran a key level where a pullback was expected. The next key level from here, and while we're talking, I should check the silver price for you to give it, because this will become part of history. Watch that I'm saying to you. The next key level from here, after this, that you will have a meaningful pause like you've had a meaningful pause in silver recently since January the 30th, the end of Jan. The next meaningful pause will be at that 333 mark. So if I go back to that monthly time frame, let's switch some stuff off here, and you've had this run up which took you to 121, and then you had a slam down that took you to a low of 64. 121 to 64. That's almost 50%. Almost, not quite. That's a heck of a sell-off. But you were absolutely smashing it. You were smashing it. How many green candles in a row? 2, 3, 4, 5, 6, 7, 8. You had 9 months in a row, getting ever more bigger and faster. It was just throwing profits at us on our leverage trades. Now you ran that interim at 90.5, pullback. The next level, Anthony, the next level where we have a target where you will have a meaningful pullback, 333. So let's be clear, you're sitting here at 75.9. You can buy sub $76, supposedly. Now, you won't get physically an ounce delivered to you for $76. Good luck with that. But technically, in the spot markets, you have sub 76 available and the next major move. So let me just remind everybody of that setup, because you're probably, many of your people, I visualize all these charts in my head. I've been looking at them, drawing them for ages, but this is your big move, your next big move. And it's going to the 333 level. And by the way, as we had with the interim level at 90.5, you actually ran 121. You were going up so damn quick. You actually ran 121. Let me just reload that. It's taking a while to put the, no, we don't want that. XUSD. So here's this technical draw on silver. Everyone's so down on silver right now. Wait till gold starts moving. This is your 3 months, so it's a quarterly chart. That was the level, 90.58. You've smashed it. Now you're being returned a fair bit on it. But I can say to you already, watch it, because if gold starts going again, silver will start drifting up. This quarterly chart won't end looking like this. You've only had January and half of Feb. You've got the other half of Feb and then March still to come. It won't shock me that this green candle body comes back up some degree. But right now it looks like a shooting star, which means a pause and a pullback. But if you look at it on the weekly or on lower time frames, let's just do it on a monthly. You can see, let's get that back in. You can see you've already had a dip and you've already started to return back up. Sorry for this. I've got to do this. Let's take it back up. Right. But the key part that I was showing with all of this, before we lost our way a little bit there with that jaw, is that you've got 330.58. We see it. I've called it all the threes. Depending on which platform, you get different values. And as I highlighted here, you overshot. Targets aren't meant to be run exactly. They're meant to be run through. A sprinter runs through the tape. He doesn't stop dead on the line. And this will be run through. So where is that? That could be 400. It could be 375. Could be, how long is a piece of string? And then you'll get a reaction and you'll probably trade back below 330 in the same way you trade back below 90. You went as low as 60, 64. So that's what's coming. That's what's coming. This debasement, devaluation has barely begun. They started referring to the debasement trade. It's not a trade, it's an investment cycle of decades. At least one, possibly 1.5 or more, depending on how fast they let things happen. And we've only just begun. And that's how I'd like to hand back to you.
Yeah, thanks so much for running us through the charts. And yeah, that's, thanks so much for coming on. Really appreciate you covering it all. And my last question was going to be, what's the message you want people to take away? And it sounds like it's the debasement trade, watch out. But yeah, is there anything else?
We had a short chat as well before we started, and if you've seen the Epstein revelations regarding Bitcoin and everything else, and you still sit in a world of that this was a benevolent act by an imaginary Japanese friend that brought you your freedom and liberty money system to save you from the depths of 2009, which was bank crashes. Multiple banks were bought out or crashed, Lehman's, etc. Property, excessive valuation and busts, plus the packaging of toxic debt sold into European banks. We're talking about a global depression that was reversed, and they bailed all the banks out at the cost of humanity, the socialization of the costs after the privatization of the profits. And then they said, it's time to move on, it's time to move on. You're hearing Trump saying it's time to move on from these Epstein revelations. If you don't get to the conclusions you're meant to get to about how the system works and how digitization of money versus me having cash and just giving you some, and it's being nobody else's business because I wanted to cheer you up and you were a quarter bit short, and there'd be no record of it bar our own memories between you and I, that now having a digital system is not going to be weaponized, utilized, and absolutely working against you, and that the originator of the digital money solution is in fact this Bitcoin creation, and that 3 of 5 developers were in fact funded by Epstein, and you think that bought no influence, and one of them, Adam Back, went to Epstein Island, where basically they raped children and were on film, so that people are weaponized, captured, blackmailable, and part of the club for life. When you enter that club and you think that that has no effect at all, and there's nothing bad, and you have BlackRock being the ETF that gets approved, that pumps your token thing, whose CEO is part of the World Economic Forum, and actually now the leader of the World Economic Forum, the people behind the strap lines, you will own nothing and be happy. Not so sure about the latter part, depending on the farmer they're injecting into you. If you are still in this Looney Tunes belief system that is something noble about liberty, and giving you sovereignty, then I have nothing more I can say to you. But the World Economic Forum is not your friend. Tokenization that BlackRock and Finkelstein, as I call him, particularly keen on bringing, is absolutely about establishing a globally found network digital NFT proxy that holds the ownership of all your physical assets, so that once they print up all the tokens they want, they can buy up all the NFTs and become the owners of all physical assets. Your house, your everything, having an NFT which will have all the details about it and conveyancing all kept online, etc., etc. So if you are under the illusion that the digitization is inevitable progress that must happen, where's the inevitable progress on our food supply chain and not putting poisons on it? Where's the progress that has to happen on cancer, longevity, better quality of lives for people, ensuring people don't go without water and basics in third world countries, all of that? No. Data centers. We must build data centers. Water, everyone must pay for it. It's this new absolute thing to run your social prison. The imperatives, the priorities. If you cannot see what is happening, you deserve everything that is coming for you. Let me just say that. And we are, our community, the Market Sniper, are here for the people who aren't NPCs, useless, foolish trolls that are allowing and permitting, by their subservience, their cowardice, their lack of speaking out, their lack of pushback, and their lack of intellect to even see this. If you are not one of those people, you might belong in our community. And we are hell-bent on resisting all of this, preserving our capital, preserving our wealth, building immensely our wealth. We've already made more probably millionaires just trading gold and silver in the last 6 months than any other small business that I know of any variety. And we will continue to resist and preserve our capital and secure as much of our freedoms and life for what's left in what is a tapering new world order chokehold system that is being lowered down on you, whether you choose to see it or not. And that's who I work for, the people that choose to see it. That's who I get up every day. That's where I'm messianic. That's where my anger sits. That's where my motivation sits. That's where I'm a messiah. I'm a messiah to those people, and I aim to help. I aim to help move everybody forward to having a better life in totalitarian times. And you can follow us on the Market Sniper. All our links for booking a call are in our YouTube, the Market Sniper. And I'm also on X under the Market Sniper. And we cover their digital creeping surveillance tokens as well under the TheCryptoSniper, and also on X under the TheCryptoSniper. Thanks for having me on, and thank you for the work that you do.
Yeah, great. Thank you so much, Francis. I'll make sure to put all those links below in the description if anyone wants to access your work. But thanks again for your time. Hey, everyone. Thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right, thanks again.